the reason that thinking out 100 years makes sense is because when you think out 3 generations, it's very clarifying, and it allows you to avoid all the noise and all the confusion and all the sound and fury. And everybody wants to like wave smoke and mirrors in front of you and get you to juggle razor blades and shock and awe you in order to get you to give them your money. Everybody's going to always try to get you to panic. They're always going to basically fudge you. They're going to say, oh, this is not safe. That is not safe. And their goal is to get your Bitcoin from you. They may not even realize they're trying to get their Bitcoin from you, but they want to be relevant, right? What I'm saying is you own the most desirable thing in the universe and you lock it away and you wait for 100 years and your family is rich.
Today, we once again tune in to the insights of Michael Saylor, who, in his latest interview, has unveiled a trove of perspectives on Bitcoin. He delves into the cryptocurrency's compelling value proposition and articulates how this asset will prove genuinely indispensable in the challenging times ahead. Saylor further expounds on his predictions for future price movements in 2023, articulating a bullish stance for the upcoming months and years. The focal points of his discourse revolve around the impending halving event scheduled for the first quarter of 2024. This event is poised to reshape the dynamics of the Bitcoin market, and Saylor sheds light on its potential implications. Additionally, he touches upon the imminent approval of a Bitcoin Spot ETF, spearheaded by BlackRock. This development, coupled with similar initiatives by financial giants such as Fidelity, Invesco, ARK Invest, and other major corporations managing substantial financial portfolios, is expected to catapult the demand for Bitcoin to unprecedented levels. As these renowned entities offer Bitcoin Spot ETFs, the cryptocurrency market is poised to experience an unprecedented surge. Notably, large corporations, financial institutions, and even governments are venturing into acquiring Bitcoin as part of their investment portfolios or as a means of preserving value. This influx of institutional interest is anticipated to elevate Bitcoin to new heights. Saylor doesn't shy away from addressing the topic of the US dollar and its undeniable depreciation over time. He suggests that this devaluation might just be in its infancy, gaining momentum as time progresses. In this captivating narrative, Michael Saylor beckons us to pay close attention to the future of Bitcoin. The convergence of significant events, such as the halving and the introduction of Bitcoin Spot ETFs, promises a transformative period for the cryptocurrency. So, without further ado, let's dive into the video and explore the intriguing insights Michael Saylor has to offer about the future of Bitcoin.
100 years ago, an acre of property in Miami Beach was about $10,000. And now it'll be about 20 million. So that's a factor of 2,000 increase in price. That's against a fixed yardstick. If you do the calculation, the US dollar is being inflated and supply 7% a year for 100 years. Weak that's the strong currency. That's the world reserve currency is increasing and supply 7%. So the asset inflation rate in dollars is 7% a year over 100 years. That's how you get from $10,000 an acre to $10 million an acre. Now, weak currencies in the developing world are inflating at 14% a year, unless they're really mismanaged and they're inflating at 21% a year. But I'll give you a simple fact. If you start with $1 million and you hold it in dollars in currency that's being inflated and supply at 7% a year, after 100 years, your $1 million is worth about $700. But what do you think it's worth if you're holding it in 14% debasing currencies? 28 cents. Okay, so clearly the weak currencies don't last 100 years because people are smart enough to realize that $1 million going to 28 cents is not a good investment. But the strong currency is taking you from $1 million to $700. And that's the rate in the last 100 years when the US is winning all the wars. We're winning all the wars. So the next 100 years, I don't think it, the question of what's the future of all these currencies in these countries, the euro versus the yuan versus the dollar, I don't think it's really that relevant. I think what's relevant is you just have two choices, or we have three. You either hold your money in the strongest currency in the world, and you're losing 7% a year, you're being cut in half every decade, you're being cut in half 10 times in 100 years, and you're going from $1 million to $700. Or you put your money in the weak currency and you're being cut in half every 3 or 4 years, and you're going from $1 million to 28 cents. Or you put your money into a diversified portfolio of conventional assets, conventional real estate, if you invest in REITs, securitized real estate, or you invest in S&P companies, big companies, you're probably going to grow at 7 or 8% nominally. The money's going to lose 7 or 8% of its value in real terms. And in 100 years, the $1 million of purchasing power you have today will be $1 million in 100 years. You won't have gone bankrupt. You just won't have made anything. So if you want to actually beat that 7% hurdle rate, then you need to strip away the risk and the liability from the asset class. So the risk is your property is seized. The risk is an earthquake hits it. The risk is a flood. The risk is rain. The risk is the executive running the bank steals the money. The risk is the tenant in your building sets it on fire, or they don't pay their rent. The risk is the mayor rent controls your property. The risk is, such and such company, Nokia can't compete with Apple, and BlackBerry can't compete with Google, and such can't compete with AI, or you get unionized. I could give you 100 risks, but the bottom line is the reason that conventional assets like real estate and like stocks, the reason they can't beat Bitcoin is they can't get away from the risk and the liability of having human beings operating a physical property in the real world, because lightning strikes in the real world and governments act in the real world. So Bitcoin is, in my opinion, over 100 years, theoretically in the long run, it's like a 14% versus a 7% monetary inflation rate. Now, if you look backwards, there's a time when Bitcoin was growing 200% a year, then 100% a year, and the last 40 months have been 40 to 50% a year. So clearly, it's reasonable for Bitcoin growth to be cooling at some point, but the difference between 14% and 7% is the difference between your $1 million becoming $1 billion. At 14%, your $1 million becomes $1 billion of purchasing power, right? And at 7%, your $1 million stays $1 million, right?
In a world where major institutions, media outlets, businesses, governments, and even ordinary individuals are steadily gravitating towards Bitcoin, the understanding of its value proposition is becoming increasingly widespread. This trend is vividly reflected in the remarkable growth that this asset has experienced since its very inception. According to Michael Saylor, a growth that is only just beginning, with the years ahead potentially mirroring or even surpassing the positive trajectory of this cryptocurrency's price. The allure of Bitcoin is becoming more apparent as a growing number of entities recognize its potential. This surge in interest is not just a passing phase. It signifies a paradigm shift in how we perceive and utilize currency. Saylor suggests that the upcoming years may prove to be equally favorable, if not better, for the price performance of this digital currency. Amidst the backdrop of a steadily weakening U.S. dollar, attributed to questionable decisions by those in power and unbridled monetary issuance, Bitcoin is emerging as an increasingly attractive safe haven. Investors, driven by the desire for substantial asset growth and appreciation, are turning to Bitcoin as a resilient store of value. Unlike traditional currencies subject to erosion through inflation, Bitcoin presents itself as a form of hard money, offering a haven where the purchasing power remains preserved over the years. As the flaws in traditional monetary systems become more apparent, Bitcoin stands out as a viable alternative for those seeking both substantial returns on investment and a reliable means of preserving wealth. The narrative of Bitcoin as a digital asset with enduring value is gaining traction, drawing in a diverse array of participants who recognize its potential to redefine the future of finance.
So ultimately, you can get excited in the near term about hyper growth Bitcoin, the 40-50% Bitcoin, that's hyper growth. And I can give you a dozen reasons why it'll continue to grow more than 14%, over the next decade or so. But the reason that thinking out 100 years makes sense is because when you think out 3 generations, it's very clarifying, and it allows you to avoid all the noise and all the confusion and all the sound and fury. And everybody wants to wave smoke and mirrors in front of you and get you to juggle razor blades and shock and awe you in order to get you to give them your money. It's like, for example, if you were the royal family of the UK and I said, oh, there's a pandemic in London, but there's no pandemic in the middle of this island in the Atlantic, so I will trade you 1,000 acres in the middle of the Atlantic for the center of London and Buckingham Palace, and Chelsea. Would you trade in a panic? Because if you did, when the pandemic ends, you would realize that you own something worth nothing, and you gave up the middle of London that was worth $100 billion. And so that's why everybody's going to always try to get you to panic. They're always going to basically fudge you. They're going to say, oh, this is not safe. That is not safe. And their goal is to get your Bitcoin from you. They may not even realize they're trying to get their Bitcoin from you, but they want to be relevant, right? What I'm saying is you own the most desirable thing in the universe and you lock it away and you wait for 100 years and your family is rich. And if that's the case, then why would you ever watch their television show? Why would you ever give them your money? Why would you ever pay them a commission? Why would you give them a 2% management fee and a 20% participation? Why would you buy their altcoin? Why would you buy their stock? Why would you hire them to give you advice? Why would you read their writing? Why would you listen to their videos? You don't really need to do any of that if you just buy Bitcoin and hold it. And so that's why the rational thing to do is think like the Emperor of Japan. I mean, haven't they owned the middle of Tokyo for 1,000 years or something? Or think like the King of England. Don't they own the middle of London for the last 1,000 years? And if you go look at the royal family in the UAE, it's illegal to buy beachfront real estate in the Emirates unless you're a royal. They won't just sell it to you. And it's because smart people realize that you should keep the high quality property for the next 100 years. You can't go buy the middle of Central Park, no matter how much you bid. I can't buy it for $1 billion an acre. The city of New York will not sell it to me because they're thinking out long term. And if you had sold Central Park at any point in the past 100 years for any amount of money within reason, for a 200% premium to the going rate of real estate, it would have been a mistake, right? It's always a mistake to sell the good thing and buy the average thing or the conventional thing.
Michael Saylor stands as a firm believer in the bright and promising future of Bitcoin. With unwavering confidence, he asserts that there is currently no better asset to embrace and accumulate for the long term. Saylor advocates a strategy of holding on to Bitcoin indefinitely, emphasizing that selling it could lead to everlasting regret. The question naturally arises, do you share Saylor's bullish outlook on BTC? Are you equally convinced of its potential? We invite you to share your analyses and predictions in the comments section below. The landscape of cryptocurrency is dynamic, and diverse opinions shape its trajectory. Are you optimistic about Bitcoin's future, or do you hold a more cautious perspective? If you found this video informative or intriguing, Don't forget to click the like button and subscribe to our channel for more similar content. This is Wealth Wizards wishing you an excellent day. Goodbye.